$47 trillion is about to change hands in the next 15 years, the largest wealth transfer in human history. And almost nobody will actually receive it. Here's what's really happening while financial advisors sell you inheritance streams. Baby boomers currently control 70% of American wealth: real estate, stocks, businesses, pensions, and starting in 2026, the liquidation accelerates. 10,000 boomers turn 75 every single day. Assets start converting to cash. Estates get settled. And here's the part nobody mentions. Most of that money never reaches the next generation. Let me show you the mechanism they don't explain. When someone inherits a home worth $800,000, they don't inherit wealth. They inherit a taxable event, a maintenance obligation, and a forced sale timeline. Most heirs can't afford the property taxes, don't want to manage tenants, and need liquidity for their own lives. So what happens? They sell within 80 months. And who's waiting? Institutional buyers with cash offer 7% below market value. Blackstone, Invitation Homes, Pretium Partners. They're not competing with individual buyers anymore. They're positioned at estate sales, probate auctions, and distressed family liquidations. The wealth doesn't transfer from boomer to millennial. It transfers from individual to institution. Here's the second mechanism. Inherited IRAs and 401 kiloseconds. Under the Secure Act, most beneficiaries must now withdraw the entire balance within 10 years. Sounds generous until you realize what that means. Forced distributions, compressed tax brackets, penalties that can consume 40% of the inheritance. And where does that tax money go? Government spending that disproportionately benefit institutional contractors and corporate subsidy programs. The wealth transfers, just not to you. Third mechanism. The financial advice trap. Heirs are told to invest conservatively and preserve capital through managed accounts, charging 1 to 2% annually. Sounds safe. But here's the math. On a $2 million inheritance, those fees extract $40,000 per year. Over 20 years, that's $800,000 transferred from your family to wealth management firms. The institutions aren't stealing. They're just positioned where the wealth flows. And most people never realize their channels, not recipients. But here's what sovereign operators understand. The wealth transfer isn't about waiting to inherit. It's about positioning to capture. Real estate investors aren't waiting for their parents to pass. They're buying discounted properties from other people's estates right now. Business operators aren't hoping for family money. They're acquiring undervalued companies from aging owners who have no succession plan. The difference: employees wait passively for inheritance. Operators position actively in the liquidation wave. You have a 12-month window, not to plan what you'll do with inheritance someday, but to position where institutional capital is already flowing. Established business succession opportunities, distressed family liquidations. The $47 trillion is moving. The only question is whether you're positioned to receive it, or whether you're just another channel transferring it to someone else's empire. This is Bold Bucks. We reveal the mechanisms wealth actually flows through, not the fairy tales financial media sells. If you understand that positioning beats waiting, you're already operating at a different level. Subscribe to confirm it.